Welcome back. Here with us on Closing Bell. Mayuresh Joshi is with us in the final leg of the show. Mayuresh, thank you for joining in. Let me throw at you what is moving the fastest right now, and that is these bunch of packaging stocks. After a long time, your Uflex, Cosmo Films, all these stocks are suddenly bursting on the charts today. I don't know, fundamentally, anything new that you've noticed? Otherwise, irrespective of today's moves, what is your overall call on the packaging boys?
Afternoon, Survi. I think 2-3 things that were plaguing the industry as a whole. One, I think the excessive supply factors that were coming through, because a lot more units were coming through, both within India and outside India as well. And with that context, I think the pricing, both for OPET and BOP films, was expected to be showing a downward spiral, which it did in the previous few quarters. To add to that, the input cost inflation that we probably seen, specifically from crude oil derivatives, did not help these companies because it was just a partial pass-through that was probably happening, and that was taking a hit in terms of the margins. Now that crude prices have probably stabilized at this juncture, the expectations in terms of the inventory that they're probably holding, the high-cost one, should have got liquidated. And with new inventory expected to come through at a relatively lower cost, sequentially, input cost inflation should not probably play out. At the same time, I think the supply factors that we are probably speaking about, looking at how conditions are being driven across the globe in terms of demand and in terms of expectations of how volume growth will be, I think some of the supply chain issues in terms of capacity additions might have taken a backseat, which might propel existing players with better backward integrated capacities and facilities to probably show some uptick in their realizations as well. So to that extent, I think Jindal, to that extent, you could probably look at Cosmo or even the Polyplex. I think some of these stocks are probably should be moving in anticipation of these triggers working in there.
All right. Hi, Mayuresh. Good afternoon. The other big mover as we speak is Escorts. The stock is up nearly around 9%. Yesterday, my colleague Sonia, she broke the story that they could be looking at selling their railway division. Now, the street has read it positively, but what's your take? Because out here, the margins are the best, close to 20%. ROC is, I think, upwards of 45%. They're also sitting on a good order book. But I think the message that's coming in from the parent is you only concentrate on the core business, not on railways. That seems to be the reading. Your take? Stock is up 9% now.
Afternoon, Nigel. No, absolutely. I think the order book, as we speak, stands close to 1,100 odd crores. Better margins compared to their other divisions as well, including the tractors and the construction equipment division. And therefore, I think the piece that is probably moving might be based on this news. But the expectation, again, outside the tractor business, the railway business is expected to grow in double digits, driven both by new products that they're probably introducing and also the export part of the business. And that, again, in my opinion, with localization, should show even better margin improvement as we head into FY24, FY25. The construction equipment part of the business is expected to grow between 10 and 12%. And the margins will expand further with expectations of more infra-related orders coming in this segment as well. For the core tractor segment, I think the expectations of mid-single-digit growth based on increasing MSP prices is what my anticipation is over the next few months. Reservoir layers have been pretty resilient, and that will probably mean that the Rabi season should probably be starting on a good footing. And the expectation in terms of Kubota adding into the excavator side of the business and the export front there as well will probably improve further in terms of margins for the consolidated business as well as free cash flow yield. So I think there are a lot of triggers based on which this stock is probably moving.
Some of these real estate companies are moving now. So Prestige Estates is up close to about 6%. Keystone Realtors, which is known as Rustamji, when they develop the building, that's also higher in trade. So there is some activity that you can see in those. Prestige moved up and now slipped a tad bit. The other one is Keystone Realtors, 4.5% higher in that. Mayuresh, afternoon, wanted to get your thoughts in on oil marketing companies. Till the entire election is out of the way, how would you view OMCs? Is it a avoid?
Yes, and I think, Rima, afternoon to you as well. I think that is what the house call has always been. I think it is subject to too many regulatory and government changes that probably happen as we move along. State elections, general elections, what you've seen as a precursor in terms of the LPG pricing mechanism, the expectations in terms of petrol and diesel cuts also playing out, might weigh heavily in terms of how their balance sheets might probably play out. So on the marketing side of the business, as far as OMCs are concerned, you're definitely going to see some element of pain as this year probably progresses. On the refining side, there is some respite because what we had seen in terms of the correction of Singapore GRMs, you've seen Singapore GRMs come back quite smartly, and therefore the refining part of the business might hold up. But generally, I think with the overhang that always persists in terms of regulatory actions, even if the dividend yield offers to be very, very attractive, as does the cash yield for these stocks, also the valuations compared to the rest of the pack, I think this always supersedes in terms of what actions might actually take a detrimental hit in terms of earnings. So I think we normally avoid OMCs in our portfolios.
Avoid normally and avoid during, special circumstances as well. Well put. Mayuresh, we'll leave it there. Thank you very much. Good speaking with you. Appreciate you joining in with all of that perspective. It's always a pleasure.